Assalamualaikum and a very pleasant day to Madam Nik Nur Shafika and Sir Muhammad Khairul Arif. We are from JBA 145K and today we'll be presenting on our company analysis. My name is Shahid bin Shaharuddin and these are my group members.
My name is Muhammad Hakimi bin Ahmad Abeha.
And my name is Daniel bin Muhammad.
Ahmad Irfan Solim bin Aminizam.
And my name is Muhammad Firdaus bin Nazauddin.
Bismillahirrahmanirrahim. My name is Daniel bin Muhammad and my part is presenting about the financial analysis. Financial analysis is a process of evaluating business, project, budget, and finance related to transaction to determine their performance and suitability. And what is financial analysis? Financial analysis is to analyze whether an entity is stable, solvent, liquid, and profitable enough to warrant a monetary investment. Financial analysis also will truly examine a company financial statement, such as the income statement, balance sheets, and cash flow statement. Moving to the next point is current asset. Current asset is provide the company liquidity asset, either cash itself or asset that can quickly cash at least in the principal. Referring to the J. Kropp Berhad 2019 balance sheet, we have developed an understanding, and here how we explain them in 2019. And the total of current asset for 2019 is 131,417. And for the account receivable, the total of 2019 is 4,639 account receivable and 5,103 on the other receivable that can be seen on the balance sheet of J. Kropp Berhad in 2019. Other than that, it also includes 45,131 on inventories. Next, non-current asset. The accumulated deposition total up to RM 118.879 in the total. And for the J. Kropp has been spent for 7,120 on the intangible asset. And this all bring up to RM 240,335 number of the total asset. For the current liability is the short-term debt and current portion for long-term debt accumulate to up to RM 642 in 2019 with short-term debt totaling up to 7908, and the current portion of the long-term debt is 734. And the amount of the account payable is RM 12528 with a growth of negative 25.9% from the previous year. And the total current liability for J. Kropp in 2019 is 46.441. And long-term liability. The long-term debt for 2019 is 5298. This includes the long-term debt excluding the capitalized assets, which is RM 4264, and the capitalized lease obligations is 1,034. Common equity. The total common equity is 10929 for 2019, and the common stock par for also known as carry value is 69926. Okay, next we're moving to the ratio analysis. Liquidity ratio. Liquidity ratio is a ratio that show being indicator if the company current asset will be sufficient to have ability to repay both short and long-term obligation. Show the company ability of short-term asset to cover pay short-term debt and those due that is within a 1 year. The chart, it shows that the current ratio of J. Kropp Berhad and SWS Capital Berhad. This chart consists of 5-year data and current asset that divided by the current liability. It just proves that from the 5 years, which is 2015 until 2019, SWS Capital Berhad has a better current ratio than Jacob Berhad, with the average analysis year for this is ratio 1.51 in the year, and better than Jacob Berhad, which is 2.38. The best ratio earned by the analysis is from SWS Capital with 1.4 at the year 2014, and the worst is from Jacob Berhad with 2.83. From this comparison, it can be known as SWS Capital beat the current ratio Jacob Berhad with a better value of it. So analysts can assume that SWS Capital Berhad is used efficiently with their current asset. Next, moving to the quick ratio. The ratio is a ratio that shows if the firm has enough or short-term asset without using inventories to cover it to cover company current liability. Above data, as we can see, ratio from two different company from 5 years analysis. From the observations, this data can be looked at the majority of it has been led by Jacob Berhad. This indicated that Jacob Berhad has better paying ability of liability without selling the inventory. Even for RM1 ringgit of current liabilities, Jacob Berhad can pay it for average 1 point. For another company, SWS Capital Berhad, for every RM1 ringgit of its current liabilities, this can pay up for RM 0.53%, and only which is below RM1 ringgit and make this company's position of debt. At least at the end, this quick ratio analysis, the analysis will have an idea that Jacob Berhad is better in cover short-term liability much better than SWS Capital Berhad. And the last one is net working capital. Net working capital or capital is comparing the company current asset like cash, account receivables, and inventory, and a raw material with a current liability, for example, account payable. This ratio measures company liquidity with two refers. Above, the chart show that the working capital between two companies. The net working capital for this company is positive. That means the company has better current asset and current liability. Generally, a higher net capital is good sign for company. This chart indicated that SWS Capital Berhad has certainly has ability of a company management to utilize the asset efficiently. And for the Jacob Berhad, it also have a good net working capital because after current asset being subscribed by the current liability, it have a huge amount left. However, the current asset will not make a very good result because the remaining current asset can be invested in the more profitable asset. Thank you.
Next, we continue with leverage ratio that consists of debt ratio, debt equity ratio, and time interest earned. Debt ratio function is to know the risk that company face by comparing its liability with total asset. If looking at the comparison, it's shown that Jacob Berhad debt ratio continue to decrease different with its competitors that continue to increase year by year and mean to be more risky. The same result can be looked at the debt equity ratio that have a little similarity with debt ratio, but it use shareholder equity to pay its total liabilities. The function of time interest earned is to know ability of the company to pay interest expense with current income. The comparison just justify that Jacob Berhad have a good time interest earned by increase this ratio to 36.6 times for its latest year. Activity ratio consists inventory turnover and total asset turnover. For inventory turnover, it's shown that how many times that the company replace its inventory after sold. With average of 5 times per year, Jacob Berhad have a lead on this ratio compared to SWS Capital Berhad with an average of 3 times. For total asset turnover, it's shown how many net sales can be turned over from its total asset and the value will be in RM. Jacob Berhad had a good total asset turnover for every RM1 of total asset. The company got RM 1.20 ringgit to 1.40 ringgit net sales. SWS Capital Berhad only good at 2015 and 2016, but for other years, it's continued to have a bad net sale. For profitability ratio, first it have a net profit margin. It indicates on how much revenue that can be gained from company for its profit. The best year for Jacob Berhad is at 2018 with 8.66%, different with its competitor which just have a good ratio on year 2016 and 2017 only. For gross profit margin, Jacob Berhad seemed to build its momentum by having increasing gross profit margin from year to year, and its competitor is still recorded a maintained ratio. Return on asset will show you the company on how many percentage of return from its asset that the company used to invest. Jacob Berhad once again have a lead for this ratio, will have a better percentage in every year. Return on equity, same function as return on asset, but this ratio use shareholder equity as investment. The result remains same with Jacob Berhad have a huge gap with its competitor. Lastly is market ratio. First is price earning ratio. If the value is positive, it's good and vice versa. SWS Capital Berhad have unstable price earning ratio with sometimes negative and sometimes positive compared to Jacob Berhad that have a stable price earning ratio. Earning per share is ratio that used to find how much earning for common stock for every each of outstanding share. Jacob Berhad have a good earning with the highest 0.18 ringgit per share compared to its competitor with the highest only 0.04 ringgit. Dividend per share is the profit that the shareholder get in the form of dividend. Jacob Berhad is maintained to give dividend to each shareholder, but SWS Capital Berhad just give it only for 2 out of 5 consecutive years.
Now I will be presenting about the risk and statistical analysis. The features that we use in the risk and statistical analysis are the risk analysis, the regression analysis, and the company's intrinsic value. Now for the risk analysis, the measurement that we use are the expected return, the variance, the standard deviation, and also the coefficient of variation. From this table, we can see that the expected return for the market is negative 1.876, while for the Jacob Berhad is 26.41, and for the SWS Capital Berhad is 5.92%. And from this observation, we can see that Jacob Berhad has the highest best or the best price return for the company's security compared to the SWS Capital Berhad and also the market. Now for the variance is used to measure the variability from an average or mean and volatility as risk measure. While for the standard deviation, it is usually used by investors to calculate the amount of expected return or volatility. And from this table, we can it shows that that Jacob Berhad has the highest variance, which is 9,228.529, followed by SWS Capital Berhad with 4,876.339, and the KLCI market has the lowest variance, which is 33.4168. It is the same for the standard deviation, which Jacob Berhad also has the highest percentage, which is 96.0652 compared to the SWS Capital Berhad and the market. Therefore, we could conclude that Jacob Berhad has the higher return compared to SWS Capital Berhad, as higher risk reflects higher return in the future. Now for the coefficient of variation. Coefficient of variation is used to measure the relative variability of risk per unit. So from this table, we can see that the Jacob Berhad coefficient variation is 3.6376, and the SWS Capital Berhad is 11.7892 for their coefficient of variation. From this, we can conclude that investment in SWS Capital Berhad has higher risk per unit compared to Jacob Berhad. And now we move to the regression analysis between Jacob Berhad and the KLCI market. The equation for the simple regression is y equal to 0.0428 plus 1.283x. The simple regression analysis between Jacob Berhad and the KLCI market shows a positive relationship between variable x, which is written in stock, and variable y, which is written on market. For the coefficient of correlation between Jacob Berhad and KLCI, it is shown that 0.4232 is positively correlated, but it has a very low relationship with the market. For the coefficient of determination, the coefficient of determination between Jacob and the KLCI market is 0.1764%. This shown that 0.1746% of total variation in Y can be explained by the regression line using the independent variable, which is variable X. Now we move on for the company's intrinsic value for Jacob Berhad. The earnings per share for Jacob Berhad is RM0.1798 and the price earnings is 7.8 times. This shows that investors are willing to pay 7.8 times for each of profits generated by the company. Next is dividend payout ratio. The value is 57.4%. The book value per share, or in other terms, intrinsic value, the value is RM1.31 and the market price for Jacob Berhad is RM1.42. As a conclusion, we can see that the intrinsic value for Jacob Berhad is lower than its market price. So this shows that the common stock for Jacob Berhad is undervalued, since the market price is greater than the intrinsic value. So as for recommendation, since the market price is greater than its intrinsic value, we suggest current investors to sell their shares. As for the potential buyers or for the future investor, we expect that, or we suggest that they keep on or hold on to the purchase of Jacob Berhad share, since the economy is not doing well right now due to the COVID-19 pandemic.
So technical analysis is a trading discipline employed by evaluating price changes and volumes to evaluate investments and locate trading opportunities. So technical analysis can be used on any security with historical data, and this includes stocks, futures, commodities, fixed incomes, currencies, and other securities. So technical analysis can be used in technical analysis tools are used to examine the ways in which supply and demand for a security will affect price, volume, and implied volatility changes. So we move on to indices. So indices are the plural for index. So what is an index? An index is a tool for a systematic way of tracking the success of a collection of properties. There are a few number of indices that we can use to do a comparative analysis on, and one of them is FTSE Malaysia KLCI, also known as KLSE. So the two main eligibility requirements stated in the FTSE Bursa Malaysia ground rules are the free float and liquidity, which are very important to make sure the stocks that have been traded have enough liquidity and physical function to decide the attributes of a company on market activities in the index. Okay, so we move on to comparative analysis. Jumping into the comparative analysis, it is to compare the selected company price behavior with the behavior of the movement of other securities or companies. Other than that, not only compare with KLCI, we also compare with SWS Capital Berhad as it is the direct competitor for Jacob Berhad. So right here is the two charts of comparative analysis of Jacob Berhad and KLCI. So I'll be explaining the chart above. So the graph above shows the price of Jacob Berhad and KLCI from the year 2016 to the year 2020, where they are listed in Bursa Malaysia. So the KLCI is a market value weighted inside of the total market value for all components. Thus, the price change for each constituent stock affects the day changes in the index in the proportion to the company market value. So, based on the indicators above, there is a price relationship between Jacob Berhad and KLCI that's all-time high. Riding on the strong local stock market performance in the last quarter of 2015, the Kuala Lumpur Composite Index KLCI reached its record high of more than 1,800 points and affected the price of Jacob Berhad to be more than 20%. Then it had a downfall on June 2020 where KLCI dropped to 1,200 points, affecting the price of Jacob Berhad. So the recovery began in 2017, lasted until hitting the second quarter, what the price of Jacob Berhad during this time is 56.59. So next, we're moving on to the competitive analysis on SWS and Jacob Berhad of the both companies. So I'll be explaining the chart above. These two graphs show the price movement of Jacob Berhad and its competitor SWS Capital Berhad, respectively. The highest price for Jacob Berhad is on 13th of July 2016, which is 39.39, and the price started to downtrend on 27th December 2016, which is 29.98. The downtrend happens again for Jacob Berhad on 29th January 2018, with the first price of 32.85. Meanwhile, for SWS Capital, the price was very bad because since 27th December 2016, the price was dropped and it starts from 0.605. The price continued to rise in 21st August 2017, which is 0.70. After that, the price started to decrease again. As you can see from the year 2016 until 2020, the Jacob Berhad trend is so good because this company have a better price between the competitor, which is SWS Capital. Beginning of the year 2016, the demand for this construction is high based on the price. The price is highly affected by the higher demand in the economy. Therefore, as the demand is low, the price of Jacob Berhad and SWS Capital will become a downtrend. So this is we can conclude that if the demand increases, the price of these companies will also increase. So that is all from me. Thank you very much.
So today I'm going to present for technical analysis, which I will cover on uses of few indicator. So the first one is simple moving average, which is basically a well-known indicator and been used by many traders and investors all around the world. So as you can see on the slide, they have two lines, which is the blue and the red line. The blue line is a long-term average, which are slower to react, and the red line is a short-term average, which is quickly to change in the price of the underlying security. So as we can see, the red line managed to intercept the blue line, which is indicate a buy setup. So at this point, all the trader or investor can make a buy trade and can make a swing trade because it is a reversal trade. So next is a moving average convergent divergent, or we can call as a MACD. MACD is one of the best indicator used in technical indicator too. So as we can see on the chart, we can buy when the MACD crosses above the signal line, or when the histogram chart turn above 0, and we can sell when the MACD crosses below the signal line. So as you can see, the first signal is when the MACD crosses above the signal line and the histogram turn above 0. And the other two is a sell setup as the MACD cross below signal line. So next is RSI. RSI is basically an indicator that measures the speed and change of price movement. So how RSI works is actually we can buy when the price trigger oversold line at 30 and then move up above oversold line. And we can sell when the price trigger overbought line at 70 and then move down below overbought line. So as we can see on the first signal, on the left one, we can see it's a sell signal because the price trigger overbought line at 70 and then move down below overbought line. So it is a sell setup, and same as the other one. And for the buy setup, we can see that the price trigger oversold line at 30 and then it move up above oversold line, which is indicate a buy setup. So RSI is basically indicate whether the security has more buying or selling pressure over a period of time. And overbought is happen due to demand is higher than supplies. So as you can see on the slides, on how the RSI works, we can trade buy when the price trigger oversold line at 30 and then move up above the oversold line, and we can sell when price trigger overbought line at 70 and then move down below overbought line. So as you can see on the chart on the right, we can detect several signal, which is 5 sell signal and 2 buy signal. So as you can see on the first signal on the left one, we can see a solid breakup on the 70 line, which is indicate sell signal. So once the overbought line move below the overbought line, we can sell the stocks. So as you can see on the first signal for buy, there is a huge momentum for bearish, and once the stock has rise above the oversold line, we can trade for buy. So next is rate of change, or we can call as ROC. ROC is basically momentum technical indicator, which is calculate the change in price percentage between the current price and the price for a certain number of period. So as you can see on the slides, on how the ROC works, we can buy the stock when the ROC move above the zero, which is we can confirm an uptrend, and we can sell when the stock falling ROC below zero, that indicate a downtrend. So as you can see on the first signal on the left, we can see that the stocks make a sideways below zero and then fall, which is indicate a downtrend. So at this time, the investor or trader can sell this stock. And the other three is buy setup. So as you can see, the price make a sideways above the zero line, and then it rise. So at this point, trader could buy this stock. So next is a stochastic oscillator. Stochastic oscillator is basically a momentum technical indicator too. Stochastic oscillator also use overbought and oversold method. So as we can see on the chart on the slide, we can buy when the K is above the D in the oversold range, while we can sell when the K line is below the D line in the overbought. First signal on the left and the third signal, we can make a buy trade because the K is above the D in the oversold range, while we can sell on the second and on the fourth signal because the K line is below the D line in the overbought range.